Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So this is the type of video I get really excited about to share with you guys, and the reason is because we're talking about the portfolio. I'm going to go over 5 of the best performing companies in my portfolio. A lot of the companies in this portfolio have done really great job in the last couple of weeks, last couple of months. So I wanted to share with you guys 5 different companies that have actually gone up so much in this portfolio since the beginning, since I bought them. So I'm going to share with you guys, of course, that, and the next video, inshallah, I'm going to try to put it together. Another 5 companies that have not done so great. Okay, so I like to be honest and like to be transparent, and I'll share that with you guys. But before we do that, just a couple of things. Please like the video, subscribe to the channel, of course. Let me know if you have any specific questions, and don't forget to join us at the Patreon account, where you get access to a lot of things, including all my buys and sells, and the Discord, where a lot of brothers and sisters are sharing very good practices. Now, just talking about the overall general markets, as you can see here, the S&P 500 year to date is up 22%. That's ridiculously amazing. Genuinely, that's really good. We're now over 5,800 right now with the S&P 500. There were people that say 5,500 is probably where we're going to end up by the end of the year, but look at it right now, we're almost up 23%. The Dow Jones almost to 14%, the Nasdaq 24%, and the FTSE 100 is about 7%. That's a year to date. And top of that, we've also got the Fear and Greed Index, which kind of gives us an idea of what investors are doing right now. So as we can see now, everyone is basically greedy about when it comes to the stock market. So a lot more people are investing and putting a lot of money into the market. There's a lot of hype going around, and I'm not a speculator. I'm not going to speculate exactly what is going to happen, but as always, of course, be cautious, be worry when this is the situation, and look for high quality businesses that you want to buy and hold for a very long time. And this is, I genuinely mean when I say this, because one of the things that I want you to understand is I'm not doing this, what's in front of you right now, just to kind of show off or anything. I'm genuinely trying to build a generational wealth, and inshallah I will get there. I'm persistent. I know exactly what I need to do to get there. I have a plan, and inshallah I'm gonna keep doing what I've been doing, and I'm gonna keep sharing this with you guys as long as I can, inshallah. Okay, now what I'm trying to say is, if you've got a plan and your plan is to leave a generational wealth for your family, for your kids, for whatever, right, then focus on that. Do not focus on the ins and base, whether markets are up, whether markets are down, and so on. That should not basically stop you from investing. That should not stop you from buying high quality businesses. And when I say high quality businesses, I genuinely mean business that is profitable, that have a product that they sell or service that they provide. Their revenue is actually heading in the right direction. They have excellent free cash flow, and so on. And you understand the business model, and so on. Don't buy some high stocks and whatever. Don't buy speculative. Don't buy one of those pharmaceutical companies that's going to go to the moon tomorrow, and then the next day you're losing thousands of pounds. I genuinely have, I think I've discussed this before in this channel. I've got friends who are down 20,000 plus pounds on specific stocks that they bought in early 2020, 2021. So be mindful, be careful, be consistent. Try to do the best that you can. Inshallah, Allah will put barakah in your investment and so on. But you just need to be, you just need to have a plan. Okay, that's all I need to say. So what I'm going to do now is I'm going to share with you guys all 5 companies. As always, please do your research. Don't just rely on what I'm doing here. Okay, I'm not a financial advisor. I make mistakes. I will continue to make mistakes, and of course I'm just a human. Okay, so I'm going to share my journey. I'm going to share exactly what I'm doing. So I'm going to go over the 5 companies. The highlighted bit here, the yellow, that's the unrealized gains in pounds. So I'm going to show you how much I'm up in each company, and the usual stuff that we look for. And the first company we're going to look at today is Air Products and Chemicals. This is one of the companies I've talked about a lot recently. I told you guys that I was not comfortable with the basically negative free cash flow here, and I'm waiting for until the beginning of the year coming, so maybe until January, to see if I'm gonna sell it, if I'm gonna add to it, if I'm gonna hold on for a bit longer. But as you can see right now, it has market cap of $70 billion. It has a wide economic mode, and currently it has unrealized gains of £1,212, which is absolutely amazing from coming company. This has been in my portfolio for over now 3 years, so this is 3 years in the making, and I'm getting paid while I wait for the stock to go up. At one point it was very much down, and then I end up buying, I think I own now 25 shares or whatever, and at the time when it started going down, I started buying more, and it seems that was the right decision. It was the right time to buy, because even now it's still unfairly valued. Okay, when it comes to the dividend side of things, absolutely amazing, nothing to worry about. The safety is 95%, but the free cash flow, like I've always said to you guys, that's a bit concerning. Now it doesn't impact the dividends, but I'm gonna keep an eye on the net income and the free cash flow of this company for the next couple of quarters. And by the way, talking about earnings report, the earnings report starts basically next week. Well, it started last week for the banks, but some of the companies that I own will be reporting. And again, because of the election, because of the earnings report, we might get a chance to actually add to some of the high quality businesses that we have in our portfolios. The first one I'm watching is J&J. J&J is still in the penalty box when it comes to selling it. I'm not sure what I'm going to do with it. I've decided to sell it, but I'm now considering maybe holding on to it a bit longer, but I will let you guys know, inshallah. The next one is ASML that I own, that will be reporting, and we also have Procter & Gamble reporting by the end of the week, and in between there are other companies that are reporting, which will be interesting to see. And the next 4 weeks you will see the earnings report come up, and will be interesting to see where we are with that. We always get an opportunity regardless anyway. So as you can see here right now, this company is expected, and the free cash flow of course is non-existent right now as we've seen it, but they're expecting to grow the earnings about 6%. Now this information you can find it on seeking Yahoo Finance. I just want to do this quickly because one of the brothers asked me recently, so I've just typed air product and chemicals. If you click an analyst here, if I can click that and then scroll down, you'll see growth estimates for the company. So next year they're expecting about 8% growth. The S&P 500 they're expecting about 12.7, and the next 5 years per annum every single year they're expecting about 6.2. So they kind of averaging out what the company is expected to report next 5 years, and then on average that's what they will be reporting. Sometimes that's accurate, sometimes it's not. So because remember it's just estimates, and the S&P 500 they're expecting about 12%. So that's where that information comes from. If you're looking for, just go to see Yahoo Finance, type the ticker, go to analysis, and then scroll down all the way and you will see it, inshallah. Right, the next company we're going to talk about today is Home Depot. Home Depot is one of the companies also has been in this portfolio over 3+ years. I'm up 1,300. The company is doing absolutely amazing in terms of growth side of it, in terms of the 5 year, for the revenue side of it, for the EPS side of it. Free cash flow is absolutely amazing. The free cash flow compound annual growth rate for the last 5 years over 8%. Total return the last 10 years about 18%, and they're expecting the earnings to grow about basically 4% for the next 5 years. Now it is really expensive. It's always been expensive according to Morningstar. I bought it while they were saying it was still expensive, but at the time I think it was almost 2 stars, 3 stars, but right now I think it's about 4+ stars, and as you so not 4 and 1 star or 2 star, I can't remember, but their price tag is $282 per share, and right now as you can see is $411 right now per share. So again, another one of the really good companies that I've had in the portfolio for quite some time. I would love to add more of this company. Genuinely, I'm tempted to buy a little bit, but I don't want to average it out. I'm up £1,300. There are other companies out there that are consumer discretionary, and I need to buy more consumer discretionary because I do own just the one, which is basically Home Depot. And so yeah, I'm currently looking and doing a bit more research on that. I'll let you know if I add one more. The next company that we're going to look at today, and that's up quite a bit, is Cummins. You probably never even heard of this company, and it was interesting. A friend of mine was basically saying like, let me see what you own. So I was just basically going through the portfolio on my phone, and then he saw this and he's like, what a strange name, first of all, and also what does the company do? And we were just talking about it. He's like, and then you're up about over £1,000. sometimes it's not about the company, what the company does, is as long as they're profitable business. And I was buying this company when it was actually down a lot. I think I owned 17 shares at the time. I wish I bought more, but as you can see here, it has a market cap of $46 billion. It's not a small company. Dividends paid over 2%. And for the last basically 18 years, they have been increasing that dividend. They will continue to do that. Now, the free cash flow, in terms of the free cash flow compound annual growth rate, slightly declined, which is not great to see, of course. But in terms of profitability side of it, absolutely no issues. They do have excellent free cash flow right now, up to 1.2, despite the decline. The total return in the basically in the last 10 years, 10%, and expected to grow about 8%. But it is expensive really right now, 34% upside from where we premium where we are from where we are right now. $250 per share is where they think the price should be, and right now it's over £330. Okay, we got two more, and the next one, if you haven't pressed that like button, please do so. It takes a lot of time and effort to put these videos together. And please also join us the Patreon account where you get access to a lot of things. Now, the next one is S&P Global. It has a wide economic moat, $163 billion. Another one that's up £1,730, which is absolutely amazing. Now, current prices you can see is $522 right now. Dividend yield of 0.7. Now, this one doesn't have a great dividend, but is here because of the dividend growth. Of course, a 12% in terms of the last 5 years, and 50 years of increase in that dividend. So this one is a dividend king. This one is a dividend aristocrat. These two are heading towards dividend aristocrat status, and especially coming in another 7 years, it will become dividend aristocrat. Aristocrats are companies that have been in the S&P 500, so they must be in the S&P 500, and also increase that dividend 25 years plus. Now, annually, I get $3.64. Safety 99% for the 5-year growth rate when it comes to revenue, and EPS is absolutely amazing. Profitability is really good. $4.7 billion of free cash flow right now. 18% when it comes to the compound annual growth rate for that free cash flow. 21% total return in the last 10 years, which is absolutely amazing. And 14% expected to grow about 8 to 14% for the next 5 years. 11% premium right now, $470 per share. It is actually quite interesting, the fact that I think a couple of weeks ago, this company was trading slightly lower than that, but now look at where it is now. In fact, let me quickly show you. So just for the 1 month, it's up about 2%, but for the last 6 months, about 23%, which is absolutely crazy. 18% for the year to date. And for the 1 year, 40%, which is absolutely ridiculous. Now, in terms of what I'm going to do with this company, especially both these companies, in fact, I'm not doing anything with them. I'm going to keep them on the portfolio, just leave them alone, let them keep growing, inshallah. And final company that you probably already know is Broadcom. Broadcom is one of my best performing companies, £5,000 profit right now. If I was to sell this right now, I will make £5,000, which is absolutely amazing. I've sold half of the shares that I used to have, or 2 shares, I can't remember at one point, and made over £1,000 in profit. And since then, it's gone up so much. So what am I going to do? I'm not going to touch it. I'm not going to basically do anything with it. I'm going to leave it alone. As you can see, it's 17% premium right now. In terms of dividend side of it, absolutely amazing. It's increased it for the last 13 years. You get $2.12 every share, 67% safety, which is good. In terms of revenue, in terms of EPS is growing, profitability is really good. Over $18 billion of free cash flow right now, compounded about 15% for the last 5 years, which is absolutely amazing. Total return almost to 40% in the last 10 years. Expected to grow about 20% in the next per annum for the next 5 years, which is absolutely amazing. But 17% premium, $155 per share is where they think the price should be. Now, this is every single one of these companies. I'm going to hold on to them. This one, of course, I will be leaving it alone for a bit. And then if nothing changes with regards to the free cash flow, then I'll take my profit. Okay, you might think, okay, it might go down by then. If it happens. Right now, I really like the business model. I like the dividend side of things, and I like the business. I've seen there's a lot of their trucks and products. I've seen them around the world, and I actually really like the fact that it's a very globally recognized company. Lint is also out there as well, which is another one that I own. Underperformed a lot, to be honest with you. But I'm gonna, this couple of years, but I'm gonna leave it alone, inshallah, see what happens for all 5 of the companies. I'm not selling my winners. right now. And as you can see, when it comes to Sharia compliance, absolutely no issues. You can pause the video and have a look at it. This one is probably the only one that's an interest-bearing debt side of things. It is slightly higher than I would like to, normally about 25%. So just to be honest and transparent with you guys, there we go. On product and chemicals, you can have a look at that. Broadcom, as you can see, over £5,000. You might be wondering, Canadian Natural Resources, that's another company that I've actually started buying recently. I will be doing a sort of a bit more analysis on this company, inshallah, coming soon. Cummins is here, £1,500. There were other companies that are actually doing well, and I'll show you some of them in a second. This Merck has actually done well. Now, what else do we have here? Qualcomm was almost there, close enough. But there we go. S&P Global, £1,700. And Union Pacific has also done well for me overall. So I'm going to share with you guys, inshallah, the losers when it comes to this entire portfolio very soon. If you have not joined us in the Patreon account, please do so. Like I've always said to you guys, it helps the channel. And if you have any questions, let me know. Have a wonderful day. Assalamu alaikum.